We're now going to talk much more about these emerging markets. Peter Cardillo, Chief Market Economist from Rockwell Global Capital, joins me from Times Square's NASDAQ. Hello, Peter. Welcome back to the show. Let me talk to you a little bit about this OECD report that talked a lot about the emerging markets, how they developed over the last couple of years, and they're predicting perhaps a little bit of rebound. But there was some caution there. I want to start by asking you, the haves and have-nots, that's been a major topic for emerging economies. Is that a concern to you?
Well, it's a concern because, we're still not sure which way China is headed. Now, we did get some good trade numbers, and that was a relief to the markets, and it indicates that perhaps the worst of the decline is over. But, if you look at the BRICS, obviously, there is a division there where we're seeing still a slowing down, for instance, in Brazil and Russia, while it looks as though perhaps India is beginning to stabilize. So that division continues. And then, of course, if you look at the developed countries, the United States certainly is beginning to show stronger signs of economic activity. Europe as a whole is looking a little bit better. Germany, is looking stronger, and the United Kingdom as well. So this division that we have, I think, points to the fact that global economic growth will probably be somewhere between 3.25% and 3.5%. That's down from about 4%. And the big question here is, does China finally begin to stabilize and pick up in economic activity, or is there
Peter,
going to be another round?
I mean, there was a time when U.S. public companies, when they made an announcement about a Chinese strategy or a developing country strategy, whether it was China or India or Brazil, you'd see a fairly positive reaction from the markets, although that's kind of waned in a bit. I guess the question is, do you think the markets are overly pessimistic about the emerging markets, or do you think they're being overly optimistic?
No, I think the markets are a little bit overly pessimistic, especially when it comes to China. I don't think we're going to see 7% growth. I think growth is probably going to be closer to 7.5%, which, of course, is, weaker growth, but not enough to sink the global economy back into recession. So I think there is a bit of strong division here, and pessimism is not really warranted.
Can I steer you to India? There's been a lot of hope, a lot of expectation that India would sort of get rid of the red tape, foreign companies would come into India. Now, I know they've done some restructuring, but the sort of attitude that a lot of investors have is that there's still a lot of red tape that needs to be getting rid of before there's more foreign investment. What's your take on India?
Oh, there's no question about that. And, they've made tremendous amounts of progress in the previous years. Of course, the past couple of years have had major setbacks, but there's no question that they need to politically change the structure in terms of inviting foreign companies to that country. There's no doubt about that. And I think that they will. I think there's a bright future for India, and I think that their growth is probably going to come from high tech, as it has been.
All right. Peter, optimistic. Thank you very much for joining us from New York City.